On behalf of my co-authors Juliana Roger and Erica Spracklin, my name is Jonathan Spanner, and welcome to our webinar for PANL 3010, the Capstone course for the MPNL program at Carleton University. Our presentation is entitled Overhead in Canadian Charities. Following a brief introduction, this presentation will explore the literature on what the greater Canadian public's perception on what overhead is, and what they are currently demanding of Canadian charities. In contrast, we will explore our observed and collected information on how charities themselves define and experience issues in overhead. We performed 9 interviews with charities across the country, and our interview findings will be reviewed and explained in relation to the public's perception. Lastly, based on both sets of information, recommendations for the future of the nonprofit sector regarding the overhead issue will be given. To introduce the topic of overhead in charities, the literature has shown that while Canadians hold high views of trust in charitable organizations, there is also a growing demand for such organizations to spend less on management and administration. We know that charities are held to a high standard of trust from the public, and thus many organizations have stated that they indeed feel pressure to conform to the public's will. However, studies have shown that by spending less on management and administration expenses, charitable organizations risk poor performance and inability to complete day-to-day tasks, which could gravely affect their ability to fulfill their missions. Given the importance of this issue, the Charities Directorate of the Canadian Revenue Agency has given us the following objectives for this project. Examine public perceptions of charities' overhead expenses and its impact on public trust in the charitable sector. Assess options for educating the public on the costs of responsible management and administration. Examine how much charities spend on overhead costs, and assess how overhead costs contribute and detract from a charity's inability to operate effectively. Firstly, what does the greater public think of overhead in charities? In essence, due to changing demographics of the majority of Canadian donors and changing attitudes towards giving in general, the public demands lower overhead costs because they are hoping to see their donations create the biggest impact, while minimizing any factors that may distance their donations from these positive outcomes. Seeing as how overhead expenses, from the point of view of the greater public, are not directly related to the charitable organization's stated mission, they see high administrative costs as irresponsible financial practices, resulting in a lesser impact from their donation. Furthermore, the greater public is specifically looking for 3 distinct characteristics in charitable organizations: transparency, accountability, and trust building. From the public's point of view, it appears in regards to transparency there are 2 chief issues from the perspectives of the greater public. The first is the lack of uniform definition from which to judge an organization's overhead spending, and therefore no way to reasonably demand more or less from an organization. The second is a genuine misrepresentation of the figures on behalf of the organizations, so as to comply to a negative feedback loop of pressure and non-transparent financial decisions, which is not reflective of the organization's true financial picture. In regards to accountability, the public demands to have honesty from organizations in their financial statements and programming in general. The Canadian donating public would like to have honest and open communication from the organizations that they donate to. Lastly, the charitable sector bases its survival on building trust with the greater public, and thus, from the public's perspective, there needs to be a reason to trust an organization. By looking at changes over time, the greater public can build trust with an organization and, from their perspective, understand how their overhead spending is being used. Trust is not built in one day, but over years, and the public is well aware of this. From this information, it is clear to see that the Canadian public's perspective on the charitable sector in general, and the spending of overhead by Canadian charitable organizations specifically, is dependent on charities being transparent, accountable with their finances, in order to maintain trust. Our perspective now shifts to the charitable sector itself and how it defines overhead.
The next step in our research was to get an understanding of how charities relate to overhead within their own organization. We interviewed executive directors or top-level managers from Canadian charities representing 4 general categories of charitable work: arts and education, religious, health, and social welfare. These categories are not comprehensive of all types of charities, but are intended to loosely represent the 4 heads of charity and a cross-section from which further research can be based. We also categorize the charities by size. Previous studies have shown that there is a clear difference in overhead ratios between small and large organizations, with smaller tending to be run more efficiently. We also chose charities with at least some income coming from donors and some from government or other charities. As has been found in previous studies, we wanted to get an understanding of whether pressure from individual donors to manage overhead is different from the expectations of government or foundations. Lastly, we chose organizations who had at least one full-time paid staff member to ensure they had the time and organizational experience to answer our questions. We sent introductory emails and followed up with phone calls to 18 different organizations and secured 9 interviews. We promised those we interviewed anonymity, so we will be identifying them by their size and charity type throughout the presentation. We pulled the information for this table from the T3010s of each charity. Both large religious charities had no income listed as coming from government or other charities, yet mentioned receiving this type of funding in their interviews. Both charities filed approximately 50% of their income as non-tax receivable income. We assume that is where they are listing their income from government and other charities. We sorted the interview questions into 4 themes: definition of overhead, pressure from donors and funders for low overhead expectations effect on organizational performance, and financial transparency as a solution to misunderstandings. With the exception of the arts organizations, our interviews found that charities tend towards a common definition of overhead, all those expenses that are not directly program related. Many of the charities listed similar expenses that they would consider not directly program related. There were a couple outlier observations that should be noted. One of the large religious organizations defined overhead as only the admin expenses paid for with donor dollars. They would not qualify any admin expenses paid for with income they have earned through renting out their building or investment income. This is of note as many charities are beginning to think about social enterprise as a revenue stream. It will be important to understand how and if this changes the perceptions of what is considered an overhead expense. We also noticed that our interviews reflected earlier research in that our arts organizations had a different view of overhead expenses. They felt that the arts are different than other charities in that all money that comes in goes directly back into producing shows. To help get an understanding of the possible gap between charities' definition of overhead and the public's definition, we asked nonprofit executives how they think the public defines overhead. All of the organizations we interviewed believed that the public define overhead as any expense that is not directly related to work on the ground, very similar to how they defined overhead themselves. 3 of the larger organizations felt that the focus of the public is on salaries in particular, something that they expressed concern for, worried that expecting low wages for those who work in the charitable sector will reduce the quality of employees, employee retention, and ultimately the ability to effectively provide services. There were 2 unique considerations in 2 interviews. The large education charity believed that the public have no uniform definition, while the small welfare charity stated that donors are moving towards a greater recognition for effective administration and its positive impact. How charities define overhead is very important to understanding how they choose to file expenses on their T3010 statement. Charities' T3010 forms are the only financial information that is required to be completed by all charities and made publicly available. This results in the T3010 being the only means by which charity watchdogs, donors, and the CRA Charities Directorate can monitor overhead ratios consistently. However, if charities have a variety of different definitions for overhead, the accuracy of these filings is called into question. To establish some context of the organizations we interviewed, we used the data present in their T3010s to calculate their overhead ratios, as can be seen here. When examining the T3010s, we found them to be very inconsistent. Some of the organizations accounted for their expenses very differently than others. 2 of the religious organizations also listed no dollars spent on management and administration, making it impossible to calculate their overhead ratio. The ratios support what is found in previous studies, namely that the arts organizations and the health organization we interviewed have the highest overhead ratios by far. The other organizations have very low ratios. These variations and the lack of similarity in reported management and administration expenditures led us to include a question in the interview asking how executives decide which expenditures to record as management and administration on their T3010 filing. All of the charity executives we interviewed told us they do not make these kinds of decisions. Rather, these decisions are made by bookkeepers, accountants, board treasurers, or auditors in their organizations. We asked executives if they feel pressure from donors to keep their overhead expenses low. This was a question that split clearly according to organization size. All 3 small charities did not feel pressure, while all the large organizations said yes, at least to some extent. The 2 large religious charities were able to point to specific groups within their donor base that are concerned with their admin expenses. We also asked the charity executives if they feel this same pressure from funders. This one split down the middle. Again, none of the small organizations felt any pressure from funders in regards to their administration expenses. All of the large organizations stated that grants almost always specify the percentage they are allowed to spend on administration. Some feel that the allowed percentage was too low to cover their actual admin expenses. The others did not feel pressure, because they were fine keeping their admin fees within the allowed limit. We chose to tackle the topic of low overhead expectations on performance with 3 different foci: using overhead expenses as a measure internally, altering those expenses as a reaction to external pressure, and the effect of those efforts on the charity's performance. In our interviews, we asked executives if they use overhead costs as a way of evaluating their own efficiency. Most of the organizations saw it as one tool, but none of them believed it to be the most important measure and felt it was harmful to look only at overhead to judge their work. Most equated the monitoring of their overhead with sound financial management. 2 organizations said they don't use overhead as a measure of their efficiency, one believing it to be an inaccurate measure from year to year, and the other stating that one should only be focused on whether they are providing the services needed by the community. We asked our interviewees if they have made any changes in their organization as a reaction to the pressure to keep their overhead ratios low. None of the small charities had felt pressure, and so none had made changes in their organization. The large organizations, on the other hand, were split once again. Most of the charities that expressed feeling pressure from funders and donors had made changes in reaction to that pressure. The 2 large organizations that have not made changes in spite of feeling some pressure stated they are always doing the best they can to remain frugal in their spending. Interestingly, one organization felt that their charity had not reacted enough to this pressure. They remarked that their charity's overhead spending was too high and they could be doing more to address it. In our interviews, we asked charity executives if keeping overhead expenditures low has affected their organization's ability to fulfill its mission. Most of the organizations had some difficulty providing a clear yes or no for this question. The small arts organization confidently said yes, that there are many times that they have had to compromise quality of a performance due to a lack of funds for the performers. The large welfare charity was also quite clear in the struggles they face every day when trying to keep up with increasing expenses, resulting in not being able to pay their staff a decent wage. 2 mentioned that the low percentage of allowed administration expenses from funders limits their ability to put aside savings for emergencies. An important theme found in the literature was the suggestion that better financial transparency from charities would help the public and funders understand what overhead is and why it is important. To get an idea of how much financial information was being shared by the charities we interviewed, we first looked through their websites for any documents that gave a sense of their finances to potential donors. We tracked which organizations shared their annual report and financial statements, as well as if either of those documents had a breakdown of their expenses. We found that the smaller organizations were far less likely to have annual reports or financial documents available on their website. Only 1 of the 3 interviewed had an annual report available, compared to 100% of the large organizations. Financial reports were far less likely to be easily available from any of the organizations. Only 1/3 of the organizations interviewed shared their financial statements on their websites, and none of the smaller organizations did. A prevailing theme arising from the interviews was that charities believe precedence should be placed on a charity's outputs, outcomes, and impact, rather than how much they spend on overhead. All 6 of the large organizations interviewed stated some variation of the sentiment that focus on overhead is misguided as a measure of a charitable organization's value. Both the small welfare and large arts organization highlighted communication with stakeholders as key to reframing the overhead conversation about their own organizations. This and a number of other recommendations coming out of the interviews will be discussed next.
Based on our findings from the interviews and our review of the literature, we have 5 proposed next steps to move the Charities Directorate forward. The first step is to take a closer look at CRA's position on overhead. Scholarly literature from authors Berlin, Masoka and Schumann, Chiquito and Neely, Howard and Goggins, and the Urban Institute Center on Philanthropy, as well as our interviews with the charities, overwhelmingly make the case that overhead expenses are integral underpinnings to fulfilling charities' missions. The Australian Charities Not-for-Profits Commission has stated that thinking of administration costs as being separate from a charity's cause can be misleading, as it fails to consider the aspects of a charity's operations that enable it to provide services. When a charity makes an application to the Charities Directorate to become a registered charity, it does so by outlining its charitable purposes and activities. The Charities Directorate therefore has at least a regulatory concern for what a charity is doing to accomplish its charitable purposes. It stands to reason, then, that it is within the purview of the Charities Directorate to be reasonably concerned about whether a charity is able to do the charitable work for which it was registered, something it is limited in doing if overhead costs are too low. This logic forms the basis of a recommendation for CRA's stance on overhead costs. To the extent that overhead costs can be justified to support charitable activities and advance charitable purposes, these costs are considered to be appropriate and important costs of a charitable organization. The literature provides a variety of perspectives on overhead. We tend to favor these broader definitions of overhead, given that costs such as fundraising, IT, and real estate are all indirect costs of an organization and not directly incurred by charitable programming. We also argue that the term overhead itself has a negative connotation, and the expenses falling under it would more favorably be described as core costs. This we define as the expenses necessary to the day-to-day operations of a charity, as well as its long-term planning in pursuit of the charity's mission. We suggest eliminating use of the term overhead and instead work to clearly define what kinds of expenses fall under management and administration, fundraising, and political activities, as these are considered to be the non-charitable expenses reported on the TU 3010. CRA recognizes that there may be overlap between the expense categories on the T3010, and its advice is to make allocations to each line reasonably and consistently. While it does provide some instruction for the reporting of related costs, the instructions are not so specific as to make reporting expectations clear. Therefore, we advise you to clarify how to calculate management and administration expenses, especially in situations where there is overlap within expense categories. We recognize certain limitations with this recommendation, particularly in relation to clarifying what might be a reasonable allocation. Our research points to the impossibility of setting any reasonableness standard for management and administration because organizations vary so greatly. Perhaps a more drastic departure from the T3010 that we know and love is to suggest adding a section about the outputs and outcomes achieved by charities in the fiscal year. The Charity Commission for England and Wales has introduced contextualization in the reporting of expenditures. Charities under this regime are encouraged to provide a narrative that helps stakeholders interpret the charity's financials. Similarly, New Zealand charities complete a performance report that gives financial information alongside the outputs achieved in the year. Charities can then use this report to seek out new funding and report back to funders on achievements. Added communication from charities to the public will help individuals gain a more complete understanding of the charity than the financials alone would, and would also help move the overhead conversation in a more productive direction. If the Charities Directorate wishes to consider this further, we suggest conducting a consultation with charities first to ensure its usefulness to them. It could be an optional addition to the T3010 to begin with, and have it be reevaluated at the conclusion of a pilot period. Alternatively, or in the interim, CRA could allow charities to submit their annual reports for upload onto the charity listings. This would mean hardly any additional work for CRA and no additional work for charities that are already creating annual reports. Overall, a change in how the T3010 information is displayed could be beneficial to all parties. Currently, when one looks up a charity through CRA, they see two pie charts, one with revenue and the other with expenses. However, Gordon Hawley, CPA with Humanity Financial Management, suggests that this portrayal causes three assumptions to be made, which are that the non-charitable costs such as fundraising and administration are ends in themselves, that lower spending in those areas would lead to greater capacity for charitable activities, and that the pie chart size is of fixed value. In addition to the suggestion of showing outcomes alongside expenses, there could fairly easily be a year-over-year view of charities so that the public can see how spending has been done over time. This suggestion comes from Ling and Roberts in their publication, Identical Program Ratios, a Red Flag of Ratio Management. Though CRA is a tax regulator, you do have an opportunity within your mandate as a charities regulator to offer charities the chance to report beyond the dollar figures. There are countless possible avenues available to help educate charities on the importance and appropriate use of overhead. There is a great opportunity with the recent launch of the Charities Education Program, or CEP, which will include site visits to 500 registered charities per year to educate charities on their obligations. Part of this education piece needs to be how to calculate and what to include under non-charitable expenses such as management and administration. To maximize the effectiveness of the CEP, the Charities Directorate is advised to consider a train-the-trainer model, whereby a certain percentage of charities engaging with the CEP one-on-one do so voluntarily with the expectation that they facilitate an information session to other interested charities in their networks. The Charities Directorate could provide the training tools to accompany the session and offer a half hour of question and answer time with the charity's education officer. This type of model would be ideal given the large amount of registered charities and the capacity of the Charities Directorate, and would also serve a larger purpose than educating charities specifically on calculating overhead. We also recommend partnering with CPA Canada to develop accounting standards specific to charities and geared towards accurately completing the T3010. This is a point Australia is striving to get to, and CRA has a real opportunity to be a world leader in this area. Additionally, a partnership with charity intermediaries such as Imagine Canada and Charity Village would be an effective way of delivering educational programming such as webinars because they have the reach, the technical expertise, and likely the interest. Delivering workshops on reporting at accounting and charity governance conferences would also be a good way of disseminating information. In terms of educating the public, we recommend 2 targeted approaches and 1 softer approach. Our first recommendation is to run an awareness campaign through social media that includes Facebook ads, which are relatively cheap and can link to CRA resources. Our second recommendation is to speak with Canada Helps about writing a series of columns to be showcased in their Giving Life blog on their website. Donors seeking information and ideas about which charity to donate to go to Canada Helps. Having information on there from the Charities Directorate about what to consider when donating would enhance the visibility and usefulness of the information at a time when donors are most likely to be seeking out new charities. Part of that series could be a donor tip sheet, which should also be available on the CRA website. These are, of course, just 3 of many avenues for education open to you. CRA has an important role to play with increasing charitable literacy and creating an enabling environment for charities to operate effectively and with transparency.
Thank you for watching our webinar. We hope this advances all conclusions into the issue of overhead in Canadian charities.